And we mentioned another mover today is 3M, which is going through a transformation of sorts. The CEO efforting a turnaround, and the numbers seem to be inspiring investors today. I want to bring in Jeff Sprague, who's the founder and managing partner at Vertical Research Partners, who has been tracking the 3M story closely as well. And Jeffrey, it's great to have you with us. So on the surface, everybody knows the 3M name, but maybe people know a little bit less about the company's roller coaster ride. What has the CEO been trying to accomplish with the business recently?
Yeah, thank you, John, for having me. Yeah, there's basically a very broad-based turnaround that's underway, focused really on the two or three main pillars of any organization, rejuvenating the top line of the company, which has stagnated in recent years, improving the operational execution of the organization as part and parcel to that, and then importantly, driving that down through cash flow so there's cash to return to investors in terms of share repurchase and buyback. And Mr. Brown, the new CEO, has been there in the seat since May 1, and certainly the early returns are quite positive at this point.
Can we find any comparables, even when I look at the long-term stock price for 3M, right? A company with such a rich history in American business that over a 5-year stretch saw real sizable declines in its stock value. It just made me think of General Electric and how that company tried to find new footing, and with some dramatic action really did in the minds of investors as well. And 3M has had this really impressive run off the not too far off lows. What's your view on what is working? Let's start with that part.
Yeah, and absolutely. There are some parallels. The history of these various companies that embark on turnarounds differs. But if I think about the GE turnaround in the last 4 or 5 years, or maybe going back 20 some odd years, Honeywell was maybe in a similar situation where it sort of lost its way. And that's sort of what's going on here. As you may know, or your viewers may know, 3M has also been embroiled in a lot of environmental and other litigation in the last couple years, and much of that is settled. There's still some things to deal with, but I think that dramatic, complicated situation really caused the company to take its eye off the ball operationally. And this new CEO, Bill Brown, who comes with a great track record out of UTX previously and Harris after that, is just really getting back to basics on these key operational issues, launching new products, cutting costs, improving inventories, all these sorts of things. And I think it is a multi-year turnaround, right? This is a big, complicated company, but it is very encouraging to see these early points on the board they've been able to post.
That's really helpful. And so they have somebody with a lot of experience in this industrial sector. I think for these big companies, and look, this is a component in the Dow Jones Industrial Average as well. We have seen deals from 3M in the past, but I know you're also watching, when you're measuring the potential success for the business, what they're able to achieve, you mentioned it operationally, without going out and trying to do some kind of transformational deal. What do you see when you look at something like organic growth for 3M right now?
Yeah, I think that's a very important point. I would expect little or no capital deployment towards acquisitions for the foreseeable future, maybe some small little bolt-ons and the like, but the company has been more working the other side, spun off the healthcare business last year, looking at pruning some other underperforming businesses to sort of distill this down to a better, cohesive company. And so I think, from this point forward, we'll really see just this focus on margins and cash and returning cash to shareholders, and really executing on what will likely be, a multi-year turnaround. So again, we're very pleased to see these early points on the board, but I think this is a 3 or 4 year story here of significant margin improvement. You asked specifically about organic growth. It was a little over 2% here in the quarter, which may not sound like a lot, but 3M had really lost its way on the top line. This is the best top line performance out of them since Q3 2021. And I think we'll see sort of an acceleration that will happen really for 2 reasons as we look into 2025. First, we'll just have, I think, a little bit better macro backdrop in the economy we see unfolding in 2025. But then with kind of a cadence of new product introductions, changes in the sales force and incentives, I think I'll call it self-help on the top line will begin to gain traction, and we'll see a nice acceleration in the top line in the company over the next couple of years. I would say this is the biggest debate on the stock. The stock is responding well today and has responded well since Mr. Brown is there. I think most investors believe and have faith that Mr. Brown can execute on the cost side and drive margins. The big question in investors' minds is, hey, what about the top line? And this early indication of some tailwinds coming through is, I think, the primary reason the stock is responding so well this morning.